If you're trying to swing trading 2026, watch this video because it is probably the most valuable one you will come across. My name is Jacob, I'm 19 years old, I've been swing trading for the past 3 years and I'm able to make a complete living doing so. This is my mentor who's taught me, who's been in the markets for 40 plus years and is worth millions of dollars. And I was also able to buy my dream car around 8 months ago, which later got totaled. But anyway, I started with day trading, probably like most of you. I blew the accounts, I blew the money, and it wasn't until my mentor humbled me and actually showed me swing trading, which is then everything clicked for me. By doing that, I was able to quit both of my jobs after graduating high school just 2.5 years ago. I was working at a gas station, I was working construction, I literally stocked the cooler as well. And the entire time, all I could think to myself was, how can I actually become free financially and with my time? Because what mattered to me the most was just being in control of my time and doing what I wanted. So in this video, I'm gonna show you guys my entire process, literally A through Z, from broker setup all the way to trade execution and everything in between. So get out your notebooks and take notes because this is probably the most valuable video you will ever find on YouTube when it comes to swing trading. But yeah, without further ado, let's get on the charts. All right, so coming on screens, we're gonna just dive right into it. First thing I want to start with is pretty much just showing you the broker I use and the trading platform. So without further ado, let me go ahead and shrink myself and we'll get right into it. So as you guys can see, I use Thinkorswim. If you guys have watched any of my previous videos as well, you guys know this is Thinkorswim. It is the actual like computer downloadable version, not the website. And I'll show you guys exactly what to do. So go over to your browser. You're going to go ahead and open up just a basic Charles Schwab account. I'm not going to log in right now, but you guys are just going to go to Charles Schwab. You're going to go to open an account right here. And you guys are just going to click the first one. It's going to be individual brokerage. Set this up per usual, nothing crazy like any other broker setup. And that's going to be pretty much it. As you're setting up your broker, it's actually going to ask you if you want to allow Thinkorswim. Just make sure you put yes. And then after you set up the broker, you're going to go to this website right here. Again, it's a Schwab website showing you Thinkorswim, blah, blah, blah. Scroll down, it'll say login to download. You guys are just going to log into your Schwab account that you just made and then just download it, whether on Windows, Apple, whatever it may be. Go ahead and download it. And that's pretty much it as far as the broker and charting platform. They're hand in hand. So think of Charles Schwab basically as like a bank account. If you deposit money into there, it's automatically going to pop up in Thinkorswim. Withdraw money, it's going to take it out of Thinkorswim. You guys get the idea. So that's pretty much it. Now let's just get straight into the charting portion of things. And we'll just get right into it. So the first part of the process of swing trading breakouts is going to be gauging market conditions. And the reason we do this is because swing trading best thrives in bullish market conditions. You know, most of the time we're buying long, we're playing to the upside. So when market conditions are green, majority of stocks are green, giving you a higher probability of winning or just a little bit of a better edge. So the way I like to gauge market conditions or look at things is a few things. I'll go over it. There's a few things and I'll go over them right now. The first one is going to be the SMA. So I use the 10, 20, and 50 SMA on my chart, as you guys can see right here. And the main things we want to look for is the actual price action, the candles surfing both the 10 and or 20 SMA. So we can see right here, market was super choppy all the way back from October last year, honestly, all the way until like April. We had kind of this dip down here. It was just straight chop and then a little bit of like some sell-off news. I think it was tariffs. Doesn't matter. I don't care what it is. But we had this V-shaped correction, came back up, broke out of these all-time highs finally, and we had a really nice uptrend. So right here, we're pretty much, it's not that we're not trading, but we're being way more cautious on what setups we're taking because there's not going to be that many opportunities, especially in a portion like this where it starts to curve down. But once market starts ramping up like this, there is an enormous amount of opportunity to make a lot of money. So this is when stuff actually starts to get interesting for me. So we can see market comes down, curves back up, 10, 20, 50 SMA all finally align right back here. And then we can see just really smooth price action, surfing the 10, coming up, bouncing the 10, almost touching the 20, bouncing again. And then now we can see the past like week, 2 weeks have been a little bit choppy again, pulling back. But this entire move right here, all the way back from January, March, all the way until June, these past 3 months, just super, super peak bullish market conditions. This is going to like, this is what you want to strive for as far as like aggressive trading. And then anything else, you're just going to pull back or just sit on your hands and stuff like that. So that's pretty much it. Gauging market conditions is not like a, you know, oh, if market's red today, I'm not going to trade. No, not every single day is going to be green, but it's just getting a good feel overall of what market is doing. Are we going up? Are we going down? Are we going sideways? Whatever it is. And then just making assumptions based off of that. Like, hey, you know, I'm going to be really aggressive when market's pushing higher, or I'm going to pull back because we're consolidating or we're going lower. That's what you want to use it for. So after you go through that, that is going to be like the first part of the process. The second is going to be actually finding these stocks to trade. And there's two ways to do it. I have custom built scanners in Thinkorswim. I use the 1, 3, and 6 month, and it makes it really easy for me. But I also have a process for people who don't have Thinkorswim or don't want to use these scanners because they're not in the mentorship. And the way I do that is we're going to go to this website. It's called FinViz. And once we go over to FinViz, we're going to go over to here. You'll see it says groups right here. We're going to click on groups. And then right here, it says group sector. Again, we're just going to get even more ads. Group sector right here. There we go. So we're going to go to sector, and now we're going to click industry right here. It's going to give us 1 day performance, 1 week performance, and 1 month performance of every single industry in the entire market. And I like to look at just the 1 week and the 1 month and find the common denominator between the both of them. So in the past week, computer hardware, silver, gold, other precious metals, whatever, semi. But first off the bat, computer hardware. If we go to the 1 month as well, bang, computer hardware. Just off the bat, that tells us, okay, computer hardware is the #1 leading industry in the market right now. I'm going to go ahead and click on it. And then I'm going to input these settings: market cap, mid over 2 billion, average volume over 1 million. And then after that, we're just going to hit overview. And now we have basically a list of some of the strongest stocks in the entire market that follow our criteria. You know, market cap over 2 billion, average volume over 1 million. These are like some of the highest quality stocks you can find. Now, after you do this, after you find the top leading stocks, we're going to go through each and every single one of these tickers. And we're going to do is plug them back into Thinkorswim. And once you go through all of them, you want to look for a specific pattern. It's called a high type flag pattern. And I'll show you guys a good example of that. So what you want to see is basically a stock make a big move to the upside, pull back to both the 10 and or 20 SMA. It can pull back to the 10, 20, or both, and then start to put in some higher lows. So what you want to see is a stock make a big move, pull back to the SMAs, create higher lows and lower highs at the same time, kind of creating like a range essentially. You want to see the stock expand and then pull back to the SMAs on lower in volume and start to get tighter and tighter and tighter until the stock gets that full formed flag pattern and it's ready to break out. Try and find an example for you guys right here. Boom, SNDK, beautiful example. Stock makes a big move. I mean, there's multiple on SNDK, but I'll just go over the most recent one. So we can see SNDK from May 18th until June 3rd, it ran around 50%, pulled back to the 10, pulled back to the 20, created these higher lows, created these lower highs, built this little flag range right here. And then boom, on the 11th, stock broke out, took out this previous day's high. And this would have been breakout day. This is the day you're entering. So essentially, after going through FinViz and looking at the top maybe 1 to 3 leading industries, you can even go 5 industries, finding those, 15 to 20 stocks that are on there and finding the ones with this criteria as well, with the high type flag, with the tapering volume, with the ADR above 5%. Those are going to be the ones you're going to put on your watch list. And pretty much after you put them on your watch list, you'll have, 10, 20, 30 stocks. It really all depends on where market is. You'll have more or less opportunities. For me right now, I have a good chunk of stocks. It's, what day is it today? Today is Wednesday, so we're midway through the week right now. Sectors are still maybe moving a little bit on the 1 day or 1 week performance chart. But right now I'm looking at a lot of computer hardware and semiconductor companies, which is majority of my watch list. So after building this, you're going to go through each of these that actually have the setup, and you're basically going to just go ahead and compare and contrast every single setup that's there. And you want to just compare which one has the bigger market cap, the bigger ADR percent, and which one has actually made the biggest move in, the past 30 days, whatever you want. You can pretty much just compare and contrast and find the highest quality one or the biggest leader. And then from there, that's what's going to go on your focus list right here. Ignore this. I don't know when I'm going to post this, but this may not be my focus list right now, just at the time of filming. But yeah, that's pretty much it. Just compare and contrast and really dive down to get those high quality leaders. And this is what you're going to build your trade plan out of when the week comes. I know my face is a little bit big. There you guys go. You guys can see that. But awesome. So that's how you go ahead and find those winners, find the setup that we look for, and then add them to your watch list, compare and contrast them, make your focus list. That's how you build your trade plan. Now, you're probably wondering, okay, well, I gauged market conditions, I scanned, I found the ones with the best setups, I found the leaders. How do I actually buy these stocks? And I'll go over one of my most recent trades, which is ARM. Matter of fact, I'm still in this one. I ended up trimming pretty much my entire position today. I think I made a little over $2,000 on the trade, and now I'm up, $907 today. I have like 5 shares left, so just gonna swing those, maybe re-add later. So pretty much ARM, we can see super strong stock, leading sectors we went over, made a really good move, about 100% from January, February, March, April, May 18th, all the way until June 2nd. And then it started pulling back here. We can see it pulled straight back to the 20 SMA and built really clean higher lows for 3 days. and kind of built this little range right here. So this is super clean. We can see volume tapering off as well. And then literally the most like, hey, take me setup ever, bang, it popped up. I don't know if you guys can see. There you go. You guys can see my volume a little better now. But yeah, stock broke out on high volume, tapered off as the setup tapered off. Boom, stock broke out on high volume. This was entry day right here. Now let me show you guys how I actually enter these stocks. So once a stock starts to break out with high volume, I like to usually look for 30% or more in the first like half hour of market than like the average volume. So let's say average volume on a stock is a million volume a day. If it has 300K volume traded in the first like 30 minutes of market open, volume's pretty much there. The stock is breaking out. So we can go back 1, 2, 3, 4 days ago, and we'll go to my entry 1, 2, 3, 4 days ago. Bang, right here. I'll even, let me open up my execution for you guys. Bang. Okay, so you guys can see I bought 25 shares. I basically go for 5-minute opening range highs. So ARM was a little bit different. This stock gapped up above our daily level. This is the daily level we were looking at there. It gapped up above that, so it already broke out before market opened essentially. So what we still want to do is we aim for 5-minute opening range highs. So to do that, we're pretty much going to wait for this entire first 5-minute candle to form. We're going to wait for it to form, not going to do anything. We're going to buy when it takes out the high of this first 5-minute candle. And then after it takes out the high, this is where we're buying. So we can see, boom, 630 candle opens, 635 takes out the high. This is supposed to be your entry. Your stop loss immediately goes at the low of day. There's no negotiations. That low of day may be like a cent below if you're superstitious. That's what I do. But that's pretty much it. That's going to be how you enter the stock. You're also probably wondering, well, how many shares do I buy? And it's basically use a risk calculator. And I'll try my best to explain verbally how it works to you guys. But we're only risking a maximum of 1% per trade. So the way to do that, if you guys want, literally take out your calculators with me. You're going to go to your calculator app. Let's see, bang. Right here, clean calculator. You're going to put in your account value. So let's say your account is $10,000. You're going to multiply that by 1%, and that's going to give you $100. That means every single trade you take with a $10,000 account, you can lose a maximum of $100. So keeping that in mind, we're going to take the entry price minus your stop loss price. So let's see, our entry would be 362.9. Let's just say, okay, 363 minus the stop loss price, which is low of day, and that would be 350.04. We'll just round it up, minus 350. That gives us a distance from entry to stop loss of 13. There's $13 between your entry and stop loss. We're going to take $100, which is 1% of our account, and divide that by 13, which is the distance between entry and stop loss, and your number should be 7.6 or just 8. That means you can buy 8 shares of ARM at $363. And if you get stopped out at low of day, you're only going to lose $100, and that's it. You lose $100, you move on. If not, let's just see where you would have been today. So let's say you bought, it was 8 shares at 363. Now the stock closed today at 418. So let's just do the math. So 363 times 8 shares, that gives you $2,904 you put into the trade. Let's just say 2,900. And now we do 8 times 418. And that gives you 3,344 minus, what was it, 2,900? I could be completely wrong if I just forgot that. And that would give you a profit of around $444 in a span of 1, 2, 3, 4 days. And that's pretty much it. So very, very simple trade, very easy, good money made on it. And that's pretty much it. Go ahead and do this, bang, bang, clean up the chart. Awesome. So I hope that made sense to you guys. Now let's go over the last part, which is going to be sell rules. So actually, let me go back to that ARM example. Why did I even do that? So going back over to ARM, we can see usually what I go based off of is a lot of just price action. It's more of just looking at the support and resistance, looking at the chart and kind of, trying to understand what it's telling me. But just off a rule basis, I like to wait anywhere from 1 to like 3 days to take my first trim on the stock, depending on how much it's moving. We can see this was our entry on ARM. 1, 2, 3. I waited 4 days to take my first trim, and I took around 50% right here, around 440. We had FOMC today, so news pumped this thing. So I ended up just taking a good amount of profits as we took out all-time highs, and then I left some runners. But pretty much, 1 to 4 days trim anywhere from like 10 to 50% of your position. After your first trim, I always move my stop loss to break even. So after my first trim today, stop losses break even. What that does is it solidifies profit. It moves your stop loss to break even, making it a riskless trade. And now you can swing much more clearly and much more unbiased to your P&L. And lets you swing these moves, because we don't know what may happen. This thing could continue running for another month, 2 months, 3 months. And that's how you're able to make just these massive gains just by holding your runners. And then the last thing I like to look for, so after you make your first trim, maybe a couple more days go by, it's consolidating, you take another trim, maybe another 20%, 10%. And then once you're down to your last, let's say 10 to 25% of your position left, I hold the rest with the 10 SMA. So as long as the stock stays above the 10 SMA on the daily time frame, I like to hold the rest of the position. And then the day that it closes below the 10 SMA, that's when I'm taking full profits and then moving on to the next trade. But that's pretty much it. I hope you guys enjoyed this example and everything like that. If you have any questions, leave them in the comments below. And coming to a wrap, so that is pretty much the full process. In this video, I've given you guys hundreds of dollars worth of free information, but information alone is not what creates a profitable trader. The difference is actually applying it consistently, building a repeatable system that works for you, managing your risk, and actually getting feedback as you grow and improve. So if you're serious about becoming a consistently profitable trader in 2026 and you want to dive even deeper into what we talked about today, go ahead and apply for JSS 2.0. The link is in the description. I'll see you guys in the next one. Peace.